Hi, thanks for joining us for the Purdue CME Group Ag Economy Barometer results from the January 2019 survey. I'm Jim Mintert, Director of the Purdue Center for Commercial Agriculture, and I'll present the results to you, and you'll have the opportunity to get more details if you want to look at the detailed report and detailed slides at purdue.edu/agbarometer. This month, the Ag Economy Barometer recovered substantially from its reading in December of 127 to a reading of 143 in January. The recovery was really driven by an improvement in both the current condition index and the future expectations index, both of them rising quite substantially. The biggest increase was in the current conditions index, and we suspect a chunk of that was related to the fact that the Trump administration approved the second payment of the Market Facilitation Program payments to soybean growers, and also perhaps the passage of the 2018 Farm Bill, both of which occurred following the December survey, but obviously before the January survey. So this was the first opportunity to measure the impact of those two events. Along with that recovery in both the future expectations and the current conditions index, producers became more optimistic about the advisability of making large investments in their farming operation in the form of machinery and buildings. That large farm investment index improved from a reading of 51 to a reading of 62. That still leaves us below where we were this time last year, but it is a substantial recovery compared to the low point we observed in early fall when the reading actually dropped all the way down to 42. So it's a significant recovery in that. Producers were also a little bit more optimistic about the future of agricultural exports on the January survey than they were in December. The percentage of producers expecting ag exports over the next 5 years to increase improved from 59 to 63 on the January survey. And perhaps more importantly, the percentage of producers that expect ag exports to decline over the next 5 years declined from a rather large 26% in December to just 7% in January. The optimism or the improvement in optimism that took place elsewhere in the survey really didn't show up when we asked farmers about their farmland price expectations. The percentage of farmers expecting higher farmland prices over the next 12 months actually declined a bit from 50 to 48%, and the percentage of producers expecting lower farmland prices over the next 12 months actually increased from 9 to 13%. There's a lot of uncertainty with respect to what's going to take place with respect to corn and soybean planted acreage this spring, and so we've asked people that produce soybeans in 2018 what their plans are for 2019. 25% of the producers in our survey that planted soybeans in 2018 plan to reduce their soybean acreage here in 2019. And when we asked those that plan to reduce acreage by how much they plan to reduce acreage, 58% of them said they plan to reduce their acreage by more than 10%. That's a large percentage, but it's lower than what we found on the November survey. In November, 69% expected to reduce their acreage by more than 10%. So a little bit of a shift there, and perhaps a little less negativity on the soybean side than what we observed last fall. Finally, we also asked people about the size of their farm operating loan in 2019 versus 2018 to perhaps get a little bit of an idea with respect to how much stress, financial stress is taking place on farms. 25% of the producers in our survey said they expected to have a larger operating loan in 2019 than they did in 2018. So then we followed up among those that said they planned to have a larger operating loan. We asked them why that was, whether it was an increase in the size of their operation or an increase in input cost, and that was the most common answer. Over 50% of the producers said rising input cost were the reason for the larger operating loan. But 27% of them said it was because they were carrying over unpaid operating debt from prior years, suggesting that there is some significant financial stress among at least a group of producers out there. So that wraps up our overview of the Ag Economy Barometer for the January 2019 survey. More details are available on the purdue.edu/agbarometer website. Our next release of the Ag Economy Barometer survey will be on March 5th of 2019. Thanks for joining us.